If you're choosing your take profit just because you want a 1 to 2 or 1 to 3 risk to reward, you might be looking at take profits completely wrong. Because just like your stop loss needs a reason, your take profit also needs a reason. In this video, I'm going to quickly explain what a take profit is. Then we're getting straight onto the charts so I can show you different ways you can determine where price may be targeting. And make sure you stay to the end because I'm going to show you one of the most common beginner mistakes that people make with take profits. And that one mistake can turn perfectly good trades into unnecessary losses. Make sure you like, comment, subscribe. Link to my Discord and Instagram are in the description of this video. Alright y'all, let's get straight into it. Alright guys, it's going to be a quick video for you guys today. We're going to be talking about take profits. So in the last video we talked about stop losses. Now let's talk about take profits. So if you guys watched my last video, you guys should know that these are brackets, right? If you haven't watched the last video, you go over here to the left side of your screen, you click, it will say forecasting. You have the long position and the short position. Make sure you favorite both of those, and then you will have them right when you are going up like we are in this bracket right here, then that is a long, or that is you having a buy order. And when you are going down like you are in this one, that is having a sell order, or that is you going short, right? Pretty simple. So all right guys, finding your take profit is very simple. So let's first mark out our key levels, right? And I'm not going to do every single key level. Let's just mark out like pretty, close liquidity. So we have a swing high over here, we have a low over here, and we have a high over here, right? And let's go on the hourly and see what else we got to our left side, right? Because this is what we actually ended up doing today. We ended up going downwards. Okay, perfect. We have a really important low right here that just got hit. This is like the live trading chart as I'm making this video. So I'm going to show you guys how different key levels can be marked out. So these are going to be your take profits. What do I mean? So yes, I mean, if you catch a trade all the way up here for whatever reason, and let's say you enter, I hate when the drawing tool does that, but let's say you enter a trade right here, right? Let me move this over. Okay, for a short. Also, if you accidentally do what I just did like this, you can hit reverse and it reverses your bracket for you. All right, just some like cool tricks that TradingView has. So this is a crazy risk to reward, and we're gonna have a very different video on that alone, but let's just talk about your take profit placement. So understanding that this is a very important key level, right? And we understand the market is drawing to that liquidity. That is where your take profit could be. I'm not saying it has to be there every single time. I'm not saying your take profit has to be this big every single time, but just showing you guys how the market tends to work and where your take profits will usually be, right? And let's go into hourly and let's mark out the session highs and lows real quick. So we have Asia session high over here, Asia session low right there, and then we'll do the same for London session. So we have London high right here, and this is very important. This relates to take profits, okay? So please pay attention. London low right here. So right now, today was a pretty crappy day for price action, Number one, because it was just pretty choppy at first, and then notice how we displaced under all of these, key levels that we just marked out. But normally what would actually end up happening is we end up coming into the day going up into these key levels. So what could also be your take profit? The same thing as those swing highs and swing lows are going to be session highs and session lows. So if you were to catch a trade in, this area right here, and we have some sort of retracement going up, right? And now you have your confirmation to enter and you go for a long, right? Then your take profit can literally be Asia session high, right? And same exact thing if we're displaced a little bit lower and we have, let's delete this, right? We have London high, right? We're consolidating, get an entry right here, right? Boom, 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 low equilibrium or whatever it is, fair value gap. Well guys, guess what? Your take profit can be London high. And yes, the same thing goes for the downside. So if you were to catch a trade like this, and let's say for whatever reason London high was right here, you can go for London high. This is literally how it works. I know it almost sounds so simple, but that's literally how your take profits work. You got to understand the market is just its own language. So if liquidity is already drawing towards one another, then that can be your take profit level, right? Now, here's where things get tricky, okay? A lot of the times we're not always going the same exact, expansion for your trade. For example, what do I mean? Okay, let's say you call a trade right here today, right? Well, as you guys can see, you only went down, and it's a lot, but you only went down 319 points. Okay, there may be some other days where you only go down 150 points. There may be other days where you only go down 64 points. So this is why I want you guys to pay attention to this series, because I have a separate video on something very important that will help you be able to protect your risk and your capital, which is this zone right here, when we have very small trades like that, where we don't really go as far and maybe our take profit was like at 300 for whatever reason. Okay, so make sure you stay to the end of this video, because I will be dropping the name of the next video so that you guys can understand what to look forward to. But yeah, that's pretty much take profits, guys. You pretty much just put it where liquidity is resting. And then we already talked about stop losses. You put that above confirmations. That's pretty much it. I'll show you guys another example here. This was yesterday, so let's just say I was looking for pre-market confirmation. Okay, all right, we get a little bit of let's see here. We would have broke structure right here. Okay, that's the third time I placed the order wrong, guys. I'm on one today apparently. But let's say you were looking for a take profit. Well, as weird as it sounds, let's remove the equilibrium right here, right? Where's the liquidity resting? Right here, actually. So if you wanted to go for a quick trade, you're like, you know what, pre-market, I want to go in and out, right? Guys, your take profit could have been right there. Boom, snag for 67 points. So you got to understand too that with trading, not every single trade is going to be extremely big. And I think we kind of talked about that with stop losses too. Not every single stop loss has to be, skyrocketed up, but not everyone has to be stuck at like 30 or 50 ticks because you're scared, right? You have to balance out according to what the market's giving you. So a day like this, not too sure, in the moment, everything's different, but let's see what we had, right? This will be the last example. Okay. Okay. So my take profit would have probably been, I'm just being honest, right? I'd have probably lost this trade. It would have probably been at this gap, right? Because we have not yet filled it by the time that was happening. And let's see what would have happened, right? Probably would have lost the trade, but yeah, we would have went up before we went back down, But it does show you the market understanding that we wanted to draw to this liquidity. So if you already notice manipulation and then a breakout and then another reversal, which would basically be like this zone right here, then you can understand, all right, when we do enter the trade, we are going to most likely go for that key level. That's all take profits are, guys. This is a very simple video because it's very simple. Take profits, I think, are easier than stop losses. Take profits are literally just key levels and resting liquidity. Key levels are resting liquidity. So if I had to break it down in one sentence, guys, key levels are highs and lows that are important, whether it's swing highs, swing lows, London high, London low, Asia high, Asia low, the daily high, the daily low as well, right? Another take profit margin. Just want to put this out there. I don't know if I've mentioned this in my daily buys video. God, where is it? Shit, bro. All right, let's look at an example like this. So when we were at this day right here, we opened up under, the high, and we ended up, I think we almost grabbed the daily high from that day. I think the next day we ended up grabbing it, but just shows how we like to draw to those previous days, right? If you look at this right here, we ended up drawing to a day later. That happens all the time, and the low as well got drawn to as well. So that can also be your take profit levels, or I don't want to constantly repeat the same thing over and over again. Take profits are literally just key levels and swing highs, swing lows, and important highs and lows where liquidity is, obviously. It's pretty simple, bro. I mean, this is one of the easiest things for me to learn as a trader coming up, because I understood that it's just where liquidity is, So there's nothing wrong with having a set take profit, especially if you're trading these prop firms. The rules are so fucking annoying. So I understand it. You want to just get in, get out. Maybe I'm only risking this amount a day. I'm only trying to make this amount a day. But I will have to be honest with you guys. Be more flexible with your stop loss. Take profits. If you want to be set on something, make sure the data is behind it. I have data that says, okay, we're going to reach 100 ticks pretty frequent. Okay. Now, my data literally says we don't reach 300 ticks as frequently. But is there some days where 300 ticks make sense? Yeah. But will I still avoid 300 ticks? Yeah, because I'm on prop firms and I understand I'm just trying to get base hits and reach, profit levels, goals, winning days. So that's how I'm trading. But there's nothing wrong with fluctuating and setting it as well. Just with stop losses, make sure to not always set it. Make sure to fluctuate. In the next video, we will talk about a way that you can protect yourself from losses when you are in a winning trade. Because a lot of times we do tend to reverse, and that can get pretty annoying. All right, y'all. I hope you guys enjoyed the take profits video. So by now you guys should understand your take profit shouldn't just be some random number that you have for a trade. Just like we talked about with stop losses, there should be a reason behind your target. What could price realistically be reaching for? And what level or area makes sense based off the idea of this trade? And that brings me to the key mistake that I mentioned in the beginning. And it's don't become emotionally attached to your take profit. Just because you originally targeted somewhere doesn't mean you have to sit there and watch your trade completely go in the opposite direction without doing a single thing. And this directly leads into our next video, which is how to go break even on trades. Make sure to like, comment, and subscribe. Link to my Discord as well as my Instagram are in the description of this video. Alright guys, have a blessed one. Peace.